We might be just gearing up for the worst banking crisis we've ever seen. A lot of people say it's just fear mongering, and hopefully they're right, right? Hopefully there is nothing that comes from this, because anything that does is not going to be fun to deal with. But it's not what a lot of numbers are saying. There's a lot of things coming out saying how this is only going to get worse. There's been something like 200 banks that have the same problem SVB did, and obviously that's not a good thing. And if you just look at the size of just these banks that have collapsed, just even SVB, it is one of the biggest bank collapses ever. And you can see here, 2023 is already off for the worst year of bank runs in history, measured by deposits of failing banks. SVB and Signature had $263 billion in deposits combined, already more than the deposit exposure of failed banks in 2008. So these are already massively big problems, right? This is why over the weekend the Fed came out and bailed everybody out. Over the weekend, all the rich people got their money back. They made sure to get it back. But you can see in this 2008, $234 billion. And right here, we are already at $263 billion. And I think that is only SVB and Signature. So it doesn't count Silvergate and First Republic. And if any more come out, right, that would add to this. And it's already higher than 08, which comparing to 08, probably, not the best thing to do. You don't really want to look at 08 and say, that's the good time to compare to. If you're comparing to it, probably is a bad thing. And as for these banks, they are the number 2 and 3 biggest bank failures in U.S. history, right behind the Washington Mutual Bank in 2008. So, the worry of things getting worse is an actual worry there. A lot of people that say it's just fear mongering and nothing's going to happen, I think are writing off too much. People that say the whole thing's going to collapse might be writing too much into it. It's probably somewhere in between there. The only thing you could say for this, that like 175 billion in SVB, 88 billion in Signature Bank, if you go to 263 billion from just these two failing, the only thing you could say is that there's just more money in the system, right? The Fed printed trillions and trillions of dollars in 2020. So there's just drastically more money in the system. So of course it's going to be more than 2008. That's like the only positive spin you could give to this when comparing it to 08 and the great financial crisis, is saying that there's just more money in the system. So it would make sense that there would be more money, defaulting or failing. Definitely not a good thing to say, right? It's not good to see more money failing, but maybe that could explain a little bit of it. It doesn't make it any less of a problem. It's still a massive problem. And what this is leading to is a credit crunch from the banks, them not wanting to make these loans, not taking any more risk, because you have to be a systemic risk bank, or the Fed has to deem you worthy enough of a bailout. And a lot of these banks that have a lot of loans, I think the majority of loans are made by like community banks and stuff. So these banks that are making these loans for cars or houses or anything coming back, they're not making risky loans. They're not going out. There's a credit crunch. And when that has happened in history, it has not been such a great thing. As we can see here for the Fed here, you can see whenever there is a credit crunch, when this goes up here is when the standards get tightened from banks. You can see this maybe right off. You don't really have the data before this, but right here, 2001-ish, big tightening in credit, big recession. That's the dot-com bubble. Correlates with that. Right here, you got the 2008 financial crisis, peak credit tightness, and big recession. And in 2020, you had a spike in the tightened credit crunch too. And that was a little weird time because it was such a quick spike and quick bring down and a quick recession. So there's, maybe you write this one off too, but it still made a recession, right? It still spiked and still caused a recession. And now here we are with the credit crunch underway, already kind of close to 2020 levels. And this spike isn't enough to force a recession. Probably, right? I don't think there's a lot of people who are fighting to say that the economy has never been better and it's just so easy to buy things. I don't think anyone would be saying that. So no one would probably fight saying that there's a recession either already happening or very close to happening. And we also have news from JP Morgan. These guys talking about the Fed's plan, their bailout plan, saying the contagion view a day ago, it was thought that the Fed's bank term funding program facility was sufficient to protect U.S. banks, but overnight concerns rippled through European banks and now U.S. large cap banks are being sold. There are many clients wondering if we are on the precipice of a Bear Stearns or Lehman like event. So you can see even the big guys, JP Morgan, institutional desk, saying, you know, it looked good at first, looked like an all right answer, but the more time went on, the less people had faith, the more problems came up, and now maybe this isn't enough. Maybe it's got to be even bigger. Who knows what has to go on? But basically, the whole Fed's bailout fund was always a band-aid to a situation. They never really solved the problem, and until they solve the problem with these banks, you just gotta if someone's running a bad business, it should go out of business. You shouldn't be bailed out for making bad decisions. And also, JP Morgan right here got the kiss of death from Jim Cramer saying they are a fortress. So you know what that means. Because Jim Cramer said it, it's got to mean JP Morgan is about to collapse. That's just the rules of Jim Cramer. Whatever he says, the exact opposite is almost guaranteed to happen. Obviously, this whole thing is a crazy mess. No one knows what's going on. The banks are going under. They're getting bailed out. Other banks are going under. Will they get bailed out? Or is your bank important enough to get bailed out? What's going to happen with all of this? The big banks win at the end of the day, right? Because if you have to wonder, will your bank get bailed out or not? You don't have to wonder if Bank of America, JP Morgan, Goldman Sachs, like these top 10, top 5 banks, they're going to get bailed out because the Fed has already said they are too big to fail. They are going to backstop them with whatever they need to, which basically means your money as a taxpayer is going to backstop them for their bad decisions. Hopefully we don't get to a point like that, but obviously with banks falling every week now, it feels like, and major banks, even like Credit Suisse, falling the other day, needing a bailout. So nothing is really good, and it all comes back to the Feds and the rate hikes, and we'll see what they decide to do with that. If they pause rates because things are breaking, or if they raise rates and try to break even more. That's going to do it for this video. As always, don't forget to smash the like button and subscribe, and I'll see you guys in my next